lorry.
What's it again?
Red lorry, yellow lorry. It gets the
Hello,
tongue loose.
hello.
Good
Yeah.
day, everybody.
Welcome.
Welcome to Crypto EMC. Awesome. Everybody's jumping on. It seems that we've been starting the stream always in before the video feed actually starts recording. But yeah, red lorry, yellow lorry. Let's keep the tongue loose. How's it, everybody? And welcome to Crypto EMC. Okay, so we've been sitting backstage and discussing, Bitcoin, and that's kind of always the main hot topic of what we do, because it's the pulse. It gives us an indication of what can be expected with any other investment or any other coin out there, until proven otherwise, and we treat the trend as if it's going to last forever. So Lee, we've been discussing a few things, buddy, and so we've been touching a lot on whether it's going to go up or down, and we've looked at a couple of scenarios and a couple of divergences, and we had a couple of theories down there. But I think the best thing is to filter out everybody's emotions and feelings about it and the news articles, and we tend to say that, and we live by this, is show me your chart, Lee, and then we can go look for the news. And the funniest thing that I always pick up, and maybe you can add on to that, is people afterwards always come and say, well, this is the reason why it happened. But why do I only hear about it then after the calls? If I knew about that, then that would be part of the reason why I would have sold or would have gotten out. So we tend to, when it comes to these events, want to feel good about a mistake that we maybe made or a position that we didn't take profit on. So then we can blame the news article. You see, yes, China did it again, or something like that, where it's actually just physics, simple mechanics on how the market works. And maybe Lee, you can explain this, open your chart, and give us a little bit more on that and on why this is happening.
Well, I don't know where to start. Basically, from people believe that the news has caused these price reactions. I was one of them at the beginning, to be serious with you, Rodo. Really young, when I was at maybe 8-9 years old. I always wanted to become a trader because I was watching those Asian sitcoms and movies and series, and they were all talking about traders, and they were trading based on inside news, on news. And then I asked around, and I saw people looking at newspaper, finding those news, and then trade based on those news. And that idea of reading newspaper just scared me, and I gave up the idea of becoming a trader. Until recently, a few years ago, I realized that we don't need to look at the news in order to become a good trader. And basically, the chart is already telling you the momentum, which party is winning, the bears or the bulls. And after that, the news is just here to explain to the public why we did have this price action. If I'm talking to anyone who doesn't know anything about trading, and I say we lost momentum because of this hidden bearish divergence or strong bearish divergence, they're gonna look at me with eyes like this and say, well, "What are you talking about? Are you speaking Chinese?" Right? So the news is here to explain to the ground public why why the market has dumped yesterday, for example, and any event in the world could serve as an excuse.
It does, true, and it kind of the news then after that divergence was formed, kind of reinforced that, okay, yes, I should have taken profit on that divergence or something like that, because we tend to, maybe there's more, that little greedy wheel in the back of our head, and maybe this divergence gets deleted, the previous one got deleted, and then you see, it's because of that. So it's a scapegoat, and not to be taken lightly. You can't dismiss things. Sometimes riveting news is there, and that's gonna change. But I mean, that normally then creates a bigger move. I think if you think about real hardcore news, that would create like a black swan event that we experienced in that big March dump where everybody literally got annihilated. But okay, yeah. So news is kind of the thing that we look.
I've got my theory on this March dump as well. I mean, we were talking about COVID at that time, but COVID hit China in November or December the year before, and we only experienced this March drop in March next year. So why
2020, the year after?
So there's a lot of, I mean, big news like this, yes, but we will be the latest one to find out, and we will always be the one who's going to lose if you only trade on news.
That's the truth. Okay, right. So we need to understand a little bit of fundamentals and understand where the news fits in. But the technicals, guys, is going to be, that's the only place where it's actually fair. If you think about it, Lee, everybody can see the same technicals. So it's just the guy that takes the information and tries to outwit his opponents. Because, like it or not, Lee's my opponent. When my money's in the market and his money's in the market, he's my opponent. An action I take, that butterfly effect that we all know, an action I take can make that he loses his short. Because I can be sitting there and think, as he's going to hit his short, maybe I must just buy something.
It was you yesterday. I just missed the short by $475. It was you. Now I know.
You never know, buddy. So yeah.
Okay, let's maybe What Bitcoin? What is the next move of Bitcoin, right? So yesterday, we found out Evergrande. Was Evergrande the news again? They blamed China or what?
They something like that.
The payment on time, and then at the end we found out that they did pay it. And
who knows? And now everybody feels okay.
Maybe that news that Evergrande did pay at the end is also a fake news, you know? And then market's gonna dump again. Well, they can play with those news and article quite a lot. But basically on chart, what I can see. Elliott Waves, we looked briefly at this count yesterday, and this is still a really, really bullish count. And I would like to tell you, I'm gonna add another FIB level. We look at 1618, everything that has to do with 618, 618 retracement, 786, 1618 extension, which is here. But I would like to point out this level here, 1.23, especially in this crypto market. Elliott Waves traders know what that means, this level. We call it a flat.
Can you zoom in on that little area? I know people tend to like to look at the candles while we're there.
So one of my favorite setup is when I see 3 waves down like this, and then in an impulse like this, I always like to look at the difference between the extension between this move, 3 waves, and if I see another 3 wave coming up, I always like to pay attention at this 123 level area. And that was 69,407 on that FTX platform. I don't think we went to that area. We were short for a few $100, but I always wanted to, to trade this kind of level, especially on a short or on a long, both ways. So 1.3 level, it always worked quite a lot, especially on BTC as well. They like to print those flat level quite often. So I'm not gonna go in details about what is a flat and what in Elliott Waves, but basically remember this 123 level. When you see a pattern like this forming, there's always a reaction, big or small, but they will always have a small reaction. And yesterday we had like maybe a 9% drop from the top to the bottom, right? From here, what I can see, if I'm expecting this rule of Elliott Waves, a flat, we call that extended flat. Maybe extended flat, the name in English was running flat. So we went above this top here, 123. We come back. This 618 is one of the level of this running flat to stop. So if I'm counting 1, 2, 3, 4, this could be the end of the 4, and this will be a really, really bullish move if we're gonna shoot up straight from that area. In that case, I'm not even looking at 69, that 69,435 or 65 that I was looking yesterday. That for me is not relevant anymore. My next level will be at least 73 and 78,000 targets, or even much higher, if that is the end of this correction here. But this running flat also we could also drop to 59.4 or even 59.4. This will be another level that we need to watch. If the price decide to go and make a 3-wave down still, or 5, sorry, it has to be 5 waves down here, 1, 2, 3, 4, 5. So one basic on a smaller time frame, not on this daily time frame. This one level, 100% of 59,431 is becoming also a very important level. So even if the price choose to retrace a little bit at 59, that will be another area where I'm expecting a little bit of support. Okay.
That will be. Oh, sorry, continue.
Yeah. No, and I mean both. And here we are only looking at really, really bullish count. Even if you retrace to 59, it is still gonna be really bullish. Yeah, you were saying, Rudo?
Yeah, normally that would be when we go to that 59 level that you're talking is where they would sweep the lows. Because if you think about it, if you look at that shakeout right there, on that orange wave line of yours, but just to the left of it, about 4 candles to the left of it, you'll see a lot of wicks around that 59 level. Yes, and to the right of it as well, a lot of wicks. So that area is where because there's wicks, what happens is there's market executed orders there, not limit. Remember, there's 2 types of orders that you can place when you're on Binance. So you can place a market executed order, which basically says, I'll keep buying until my money is up. And there's a limit executed order. I'm going to buy, but only at this price. That's my condition. Now, when you have larger players entering the market and an additional momentum, the way that I look at these bottoms of these candles is if there's wicks over there, that's momentum. That's greed at the moment entering the market. Get me in on this discount because I see there's more. Now, sweeping the lows, what it means is all those guys, they're going to have their stop limits currently at break even or slightly in profit. And that's a promise to sell. I promise if it gets there, I'm out. Now, if the price finds its way, if there's not enough demand, price will go to where the money is. And the money's sitting at that because there's all the orders. So then if it reaches that level, what you get is you get a sweep of the lows. It literally just takes all of them out of the order book. And at the moment, I think, Lee, I think the longs would be ruling the longs versus short battle at this stage.
Yesterday, the market maker did quite a good job, actually. They already had a huge gain. They stopped a lot of people on leverage on the long. So we're going to look at this ratio long towards versus short ratio and the funding rates and so on. Okay, so now here another level. We were looking at this 123 level as well. We did stop. So now if this happens, if this plays out, right? So we were looking yesterday at the fourth wave coming down a little bit deeper. So until 53, I would say we can still be very bullish, but then the next level here, then I need to switch my plan to discount here because we know normally on that bullish count, the very bullish count that we just saw, you cannot retrace more than this end of this first wave at 53. So if you go below 53, then we have to recheck and maybe switch to another scenario. So at that time, even at that time, I wouldn't be really scared. But I mean, the first step is already, going through 59, and we're gonna do it like step by step, basically.
And the market will give us enough chance to actually react on that. So we don't have to be playing devil's advocate on that area or be overly cautious about it. There's going to be enough time to do something.
Now let's play a little bit with this with those levels. I want to share these charts. So this is the 8-hour chart I shared yesterday, and I put some, I put this yellow line. We put this yellow line together yesterday. So it's how funny it is that the price just dropped and then touched exactly that line here as one of the resistance line. And now I've got those lines in the future that may play out according to this timeline. And I've got this red line that will serve now as resistance. And the white line here, the dotted white line here, will serve as support. So as you can see, next support here, I've got 61. And now after that, we dropped at 58. And then if we lose those level, resistance will be like 62 and 59. So we can see how relevant if the price is going to drop at this kind of level at 59 that we just saw on that bullish count. It's funny enough. I mean, if the market maker want to swap the lows and accelerate this move a little bit, it will be so funny that if we can go to this kind of level, even 11th of 12th of November. No, sorry, this is 59 here, 11th of November. So maybe tonight at 6 o'clock we could have a reaction there, or if they want to waste a little bit more time, maybe we'll be there by the 14th of November. So I'm just gonna put those dates out there and let's see if this gonna play out again like this or not. So these are the timeline where I wanna see price action coming. If I'm in front of the chart and I see this price action coming to this kind of level, 59,000 on the maybe tonight at 6 p.m., I will definitely take a chance and go in long on that moment. So that will be another experience that we're gonna do all together, looking at those timelines and see how often this timeline is gonna play out.
Awesome, thanks, buddy. So we've now looked at this, and we looked at the times for entries. Can we maybe have a bencher? Say, let's look at the previous scenario, because we've now looked at the lower, the stronger retrace. What would be the telltale signs of that scenario playing out, and we're not going to these lower areas?
You can see here, like I said, this is the resistance now, this red line. I put that red line at 65,820. So if we go the next candle, the way I'm using 8 hours is also very good, because if you are looking at 8-hour chart, it means that you only need to look at the chart 3 times a day and find out where is your candle closing. So the time frame you're looking at the chart is also very important. So I choose to, we're gonna work a lot on 8 hour, maybe it's gonna be good enough for a long trade hold. So if I see any candle close above this 65.8, we can turn a little bit bullish. But as soon as I'm losing this level here, as you can see, we try to go above here already at 65.8. We just get the rejection here. So closing those candles below the 65, 68, going on the other side of this yellow line, then that opens the door for another drop at the lower low. And if you lose the previous low here, my next step will be 59 basically here on that red line. Okay.
So in short, to take away and for you guys to remember, the analysis that we're doing is based on the 8 hour. So when we're doing an analysis on the 8 hour, always check the time frame we're doing that. Then you need to go and make sure that on that time frame that we've got an analysis, that the relevant candles lock in what we want to see. So that red resistance level that Lee's got there, just hover your cursor there so we just see the exact price. It's 65,864, give or take, or which exchange you're going to be trading. So if we get to that level there, because remember, the exchanges do differ a bit. If we can open a candle above it and close a candle above it, that's the key. Not wick through. Don't look at a wick through and thinking, there we go. We're looking at open a candle and closing a candle above it. That would be a really good sign for us to continue on to that 70. And that's going to bring that real bullish sentiment in for any buyer. Now, with that being said, what we want to see is maybe a little bit more negativity in this current candle, in order for us to maybe have that push and that drive up to secure in a little bit of a bullish divergence. But at the moment with this time frame, we're not really going to be seeing that. So maybe that's when we need to go and look at the 4 hour and the 3 hour, because when you go find these clues, it's not going to be always just on one time frame.
In terms of divergence, when you look back here, 8 hour, RSI was higher highs, lower highs here compared to this pivot here, and the price shoot up, right? So that is for me a strong bearish divergence, meaning that this could be a reversal candle forming. So as a reversal candle, I would like always to see one drop, a retrace, second B wave maybe, and then a C wave down. at best. Best case scenario for me. 3 wave down, A, B, C. Now it depends how high we're gonna retrace on that B wave. B wave, if we go above the red one, it can close above the red one, but then the next one you don't want to see coming back and lose this momentum. But I'm more expecting at least an A and B and C. And if that is only A, B, C compared to this ratio, if you do a ratio wise 1 to 3, 100% retrace could end up around this 59. Quite easily. And in terms of emotion in this market, I mean, do you feel the panic yesterday on that drop, Rudo? I think
no
one has panic.
I didn't.
Real panic, right?
And I think the candle points it out, Lee, because the point actually was discussing is if you look at that whole bullish structure, if you look at all these green candles there that led us up to the 68 level, and the panic candle, if we're going to call it that, that's not an engulfing candle. Normally, if there's a reversal on a trend, which means that we might be looking at longer time frame. Now we're talking maybe a week of negativity again, or alts really getting hurt, because we see some of these questions. When we have a reversal candle and it's not engulfing the previous last bullish structure, that is telltale signs that the bears, they don't have the upper hand yet. They're getting stronger. The bulls are, the wallets are getting thinner on the bull end of the market, but it's not quite there yet. Momentum has not shifted. So we can at least at this stage speculatively say that unless something drastically happens at this stage, our thoughts and our eyes should still be looking to the upside rather than to the downside. And I think the best place to show that, Lee, is you actually go into the daily and we look at that $30,000 candle range. You can see that the last time Bitcoin was at $30,000, when we left that area of panic. And think of this high as also as an area of panic. You might be playing only spot. So for you, going up is good and going down is negative. But the other half of the market that's shorting, this is an area of panic because we're in a new higher high. I want to protect my position. So if we look at both these lows, and that's normally how we pick it up. It's a pity I missed the buy. I mean, I was busy literally driving my my move down through the country, so I couldn't get that 40,000 buy, and I had my eyes below that level with the hope that it will go that low. But that's the thing about markets. Sometimes it just doesn't give it that to you. But if you look at that area, Lee, and we look at that $40,000 level.
I was in the airplane going to France. I did manage to take. I paid like I don't know how many euros for the Wi-Fi in the airplane.
we kind of missed out on that one, and these things happen because it's 24/7, and we both, you have to live. You're going to have to be able to be fine with this as you go on through your journey, because if you don't, crypto is going to destroy you mentally. Okay, but the thing is the thought pattern. As you can see, look at those 3 red candles that took us down to 40. So we consolidated there, we hovered there a little bit, but then we had strong green candles, a clear decision that the market wants to go up. That's a bullish engulfing. That tells us we're there. It's going to keep going. The same at the $30,000 level. When we looked at those trades, when we gave you guys those entries, we had a rain and a cascade of uncertainty moving to that level. And once the target hit, the timing was right, the price was right, everything was good. We had a strong, definite green impulse out of that range. Now, if we were to flip this and invert this and turn the colors of green to red and mirror the chart, what you have at this moment is no strong bearish impulse in the opposite direction. It's merely a little bit of a pullback. So we're allowed to say to ourselves, we don't need to be panicked just yet.
No. Okay, just on the momentum wise, if I'm looking on 8 hour, if I want to buy this market, long in this market right now, I would just wait a little bit. It depends again on which time frame you are trading, but I will look for my now coming back to this hidden bullish or hidden bearish divergence. I want to see a hidden bullish divergence for me. Okay, meaning that RSI needs to come here at least at the same level or lower than 44, and price needs still to be above this level here at 59. So assume if the price stop at 61 and RSI is already here, now I can take a long with a stop at 59 maybe, and getting, you know, the helping the bulls or playing with the bulls to get this momentum up. But the problem is, if that happens, we are trading a hidden bullish divergence. And if this is a real reversal, then that hidden bullish divergence will not work. These are all like small techniques of trading, but at the end of the day, none of them can work. It all depends on on the market maker and who wants to take your money. You know,
That's true.
Yeah, it's all about this. This is only like 20% of the trading skills that you need to learn. I mean, 80% is also your mentality, and understand that every single prediction can fail. I don't know anybody who's got 100% of his trade correct. Actually, no one. I can say maybe no one has done it in the past. Yeah,
that's the thing, and we tend to forget about. You know, we always say words. That's how we communicate. But somewhere along the line, through time and bad habits, words lose their true meaning, and it's sometimes important to just, you know, ground yourself out and remember, what is it that I'm actually saying? Because psychologically, you can still remember, you still feel the right way, but you're using the wrong word. And we tend to have to look at, you know, it's Elliott Wave theory. It's Wyckoff theory. It's the Big Bang theory. It's the best we have at this stage. You know, it's not the Big Bang certainty. You know, it's a theory at this stage. There is no real hard evidence. It's the best that scientists could get up to at this given stage with what is available out there. You know, it's not fact. And that's the thing about trading as well, is because we are living in an area, because in a system where I can theoretically guess what would be the average sentiment of everybody watching this feed at the moment. But that's the best I can do. But if some of you guys literally just went through a divorce, or your dog died, or something horrible happened to you, you might be watching the stream, and I'm saying that, hey, I think my content might be good, you might be happy, Lee is showing you the love on his shirt, everything is beautiful, and then I take a trade on your emotion and I lose. And that's what trading is in the end of the day. We are guessing and we are thinking what other people are feeling. And Lee, that brings us to that support level that you've got there, and an interesting story that I picked up, and actually it took support home for me, and it was from Mark Douglas, and you said what were they trading? I think they were trading apples. I think it was, it might be Apple, it might be something else, but. The thing is, guys, we've done a lot of studies, and I see comments as well, people asking, what do you learn? I mean, you learn everything. You learn, you know, you go, and if it inspires you, you've got the right content. Go and apply it and see if it works, though, because everything is a theory. My
mind works differently than Rudo. You know, that I need something that I can apply and fix rules. But Rudo doesn't need that. He can come with a story by just looking at the candles. I can't.
I love that. That's why I'm the chart artist. I look at the candles and I want to picture what everybody's doing, and then I want to trade that. And that's the thing. We actually harness this through time. There's that maturity factor that you just can't shortcut, guys. So, but in any case, I read this. I think it was in a book, or I watched it in a video. Mark Douglas is a renowned coach in trading. So you guys should, if you don't know this guy, go look him up, Mark Douglas. But in any case, so I have to give trading in the zone. So I have to give all credit to the story to Mark Douglas, but it's a brilliant story nevertheless, guys. So he was busy coaching a guy, and the guy was a brilliant technical analysis. He knew the rules, he knew everything. He could predict and essence lay all the levels, and with great ease. The guy knew his stuff, but he couldn't be. But trading on his own, he just couldn't make it. He lost his own money, family's money, and he kept on losing money. And basically, Mark said to him, listen, you've got a unique skill set. You know all the variables about trading. So maybe go work for a trading house and just give them the analysis. Don't be trading with your own money, because sometimes getting out of your head is just the key to to become profitable, and it's truly so. You know, I had to deal with that as well. So the guy went and worked there and kept in touch with Mark, I presume, because that's how he, you were able to share the story on. But the director of that firm that he was working was a floor trader. Now, floor traders are kind of who I am. I would be a brilliant floor trader, where Lee does love the technicals on the chart. I love reading the room. Lee would be reading the stats. That's the difference between the two of us. But this guy was a floor trader, so he's brilliant at reading the room and the emotion behind it. And he met with the technical analysis for the day, and he said, "Okay, right, tell me what's so important about the TA," because he didn't believe in it. And the guy said, well, he showed him the charts, showed him everything, and explained to him that by the end of the day, this level over here is going to be the support for whatever they were trading. I think Lee says apples, but I think it might be beans or something like that. But it's irrelevant. And the whole day went by, and the end of the day, he called him in and said, "Okay, right, show me your chart." And the guy said, "See, I was right. I said to you that this support level is going to hold." And what did the guy do? He picked up the phone and he phoned down to the floor and he said, "Sell $1 million of that stock." Poop, support broken. The whole market turns negative. And that's the reality. That's something that you guys need to think of. One, we're trading against each other. I can, and you know the same strategy. So I can and have the power and the means within me to break that strategy or the belief that you have within it, I will, because I will then be buying the discount and making the money. And then the second thing is there is no guarantees in your analysis, no matter how good you are. So, yes.
Thank you for the story.
So I hope that's a good takeaway from you guys. Please go and have a look at Mark Douglas. It's all him. And that helped me get out of my head, because I tended to also want to have control over everything. So, yeah, Lee, anything else we want to touch on for today?
I mean, quickly on ETH, I saw.
Let's maybe look at the dominance. Can we look at the dominance then on ETH? Because I think the dominance in relation to what we're experiencing for Bitcoin might give us an indication of what our alts will be doing.
It's coming up. Not this one, sorry.
We should have stayed on ETH because
yeah.
Okay, right. Okay, cool.
And I don't think dominant has done much. It did drop yesterday with the dump, and no, but I just want to point out this momentum on ETH.
Go for it, buddy.
Also from the top here, we had on 8 hour we have a strong bearish divergence. We did make a higher high with a lower high in RSI. So on 8 hour, I'm also waiting for this to come back down a little bit to print a hidden bullish divergence, so we can change a little bit of this divergence from ETH. Coming back to this low, if we beat this low, I think it's going to be very easy for them to come and swipe the lows here at 4.3, even 4.3, 4.2. So I still have this box open here. So let's see if we can get this this sweet spot buy at this imbalance area at 4,041. But yeah, that would be a very nice checkout for the whole market. And for me, the trend is really to be empty before we can move up. And that is the kind of information that we have to look at when you trade. I mean, you want to read the floor with all the sentiment out there, and there's no better tools than looking at the open interest on those future exchanges. And I especially like to look at those ones from Bybit. Open interest is basically all the monies that are on the table. You are in a casino, all right? So I'm the casino. I see all this money sitting here on the table for me to grab. It's just a question of where to go to grab those money. How much money is on the leverage platform right now as we speak? And every time it's getting really high. I mean, the higher we go, the more tempting it is for the market maker to make a move. Because if it is low like this, I mean, there's nothing, almost nothing there's no money to be made, right? But if the open interest is that high already here, then it means that there's a lot of money. People have put money, are betting short, long, and they are betting against each other. So if I'm a market maker and I want to make money out of this market, basically I need to go where it's going to hurt the market or hurt the most of people out there the most. So and for me, this opening trade is still sitting at a very, very high level. I think it was between May and now it's still sitting at like all-time highs. That's why I didn't feel the panic yesterday from that dump. Now the question is, this money here, are the people long in the market, or the majority of them, are they long in the market or are they shorting the market right now? Okay, so yesterday obviously there were more longs than short, but if you look at this 12-hour chart here, long versus short ratio, I think today we are coming to like an average in the middle. So that's why I think the price is gonna stay within this area for a little bit more, of time, consolidation. But the reality is it's not consolidation. Market maker needs to make a decision. They need to pick a direction and see where is the money, where the most money is to be made for them to make a move towards this 60, 65, 65, 66, or 67, or 68. I mean, to go long or to go short. So for now, the market is pretty stable. It's like 50-50. Even though on the last 12 hours, people start a little bit of shorting more than longing. And basically this is what I can see now in this 12-hour chart. 24 hours.
That shorting is then making it quite interesting because if they're getting confident in shorting, that is a promise to buy. So maybe if you want to run a theory, now let them build that confidence, and then we try and put money in the market to force them to get the price higher for us.
Just always give them a little bit. Maybe they're short, so the price is gonna go down a little bit. Now they feel like comfortable. They're gonna add more position, bringing the stop loss or the liquidation level down, and then when they're gonna come back and hit all those stop losses, then all the shorts will be a promise to buy this price at a higher price. So that will put more oil in a fire to pop and to bring to bring this Bitcoin over 70K.
That's it.
Yeah. All right. So yeah, that's it for me.
Thanks a lot, Lee.
Do you have anything to add?
No, I think the message is through at this stage. We're in an area where there's going to be a little bit of sideways turmoil. Well, a turmoil is not probably the right word.
Before we leave, before I switch off, just for fun, I tweet that on my Twitter account as well. Hex.
Hex.
Whether you like it or not, this coin was supposed to be, according to the owner, Richard Hart, one of the best, even one of the best. Look at this move. Now, if you think you missed a trend or you missed something, that was from the bottom 0 to 45,000%. It's insane. It's insane. But even with that move, you always have a decent retrace. It retraced with 75% of that whole move. Okay, so how many people have bought
out of the market?
How many people have bought here, and now they're all sitting at a loss, and they're all hoping for this price to go back up again. And when this price, this for me, it's a good price, it's a good area to buy, to accumulate a little bit. And when it's gonna go up, look at Litecoin, for example. Litecoin, we went up, we come back this year range, and there were a little bit of marketing yesterday of Litecoin. A lot of people were talking about Litecoin. And where did we stop? Just at the bottom of this reload zone. So if you have taken profit here at the reload zone, you could have bought anything between even now and then, and you could have farmed more coins. From here to here, it's already 10%. And yesterday with that drop, we did almost 15%. So just by taking profit here, partial profit here, and buy a little bit here, you could have more Litecoin already, on this kind of easy trade. Luna, that was the calculation I made, and I think we, for once, went exactly to the target, 54.95. So I did miss Bitcoin by a few $100. I think that's because of Euro, though. You stopped the price to going from that area, and I missed by a few cents as well. There was another coin based on calculation, but I'm happy that one of them actually did hit the target. So yeah, so that's it for me for today.
Awesomely. So just bring up your Hex chart there again. I just want to sign off with one thought for you guys. So Hex, is it worth a buy? Well, if you understand the tokenomics, you understand the investment and the scale and how this thing works, only if you do that, you're allowed to buy a little bit. Please don't just blind buy, because Hex can die. There's a lot of controversy behind this. And I own some Hex, full disclosure. And but the reality is that looking at where it's at now, from where I bought and how I've been holding, I would be adding a little bit, but I'm going to be adding a little bit because 45,000% means you don't put your life savings in it, and it can still go a long way. So if it just goes back to try and capture the highs, what would be the most probable high level for the bounce there? It's going to be between your 23 and your 38. That's a 40 cent again. So from here, the probability, the safest probability I could give for upside that you can expect is a 2x. So would you want to go 2x with this one? Or would you want to wait for a better project that gives you 20x or 30x? Food for thought.
Yeah. Okay. Well, I will trade every single coin, every single project as just by looking at those this Fibonacci level in the graph. I don't really care about the project.
Don't care.
No.
Right, guys.
Yeah.
That's all we have time for today.
I do care for long term, but for short term, when you look at the chart like this, it's just about.
Lee, I've learned that your don't care is actually just a point to say that don't have emotions when you trade. Because we've had bickers on that. How can you say you don't care? We look at these fundamentals together at what time of the night, and then you don't care. But that's the reality. He does care, but when you make a trade, you have to apply your strategy, and the fundamentals should not factor into your decisions. So just take note of that, guys. So I want to say thank you for everything. Lee, amazing charts as always.
Thank you.
Let's do it again tomorrow.
Yeah. Pleasure. Guys,
Cheers,
thank you for
everybody.
being here with us. Bye-bye.